This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, May 8th, 2015. Euro dollar. So although we've seen the euro pull back a little bit from recent highs this week, the recovery outlook does remain intact while the market holds above that previous neckline that was broken the other week of a double bottom formation. The risk now is still for a move up towards the 1535 February peak, while only a break back below the recent low that we saw around 1065 would compromise this outlook. However, the downtrend is still firmly intact, and any rallies that we do see, if they do go up towards the 115.35 area, should be well capped in that area ahead of a bearish resumption and retest eventually of that 104.62 2015 and multi-year low from the 13th of March. Sterling dollar. So cable has enjoyed some really nice gains into Friday trade, with the market now trading back towards the 2015 peak at 55.52. A break and close above this level could mark a significant structural shift in the market, though inability to close above 55.52 will keep the more immediate pressure on the downside for a potential bearish resumption. Dollar yen. So not much change for dollar yen, with this market continuing to remain locked in a consolidation and contracting in volatility, which does suggest at some point some form of a breakout. For now, the key levels to watch above and below are the 118.23 area level below and 122.03 above. The break above this year's 7-year peak at 122.03 would open the door for a fresh upside extension into the 125 to 130 area, while back below 118.23 would delay the immediate bullish outlook and expose the 115.55 critical December base further down. But ultimately, only a break back below the 115.55 level would compromise the highly constructive outlook for dollar yen. Euro Swiss. So Euro Swiss has come back under pressure in recent days, although the market is expected to continue to be very well supported ahead of that recent base that we saw at 102.35 going back to the 21st of April. At this point, a higher low is now sought out ahead of the next upside extension beyond the recent highs that we saw at 105.25 and towards the 108.15 recovery peak that we saw on the 20th of February a few months back. Aussie dollar. So Aussie continues to be very well capped by previous support turn resistance just over 80. We had a recent high that was put in place at 80.75, and really only a break back above that level would compromise the immediate bearish outlook. At this point, a resumption is seen back down towards the recent multi-year low at 75.60, with a break to expose 70 further down. Dollar CAD. So dollar CAD has been finding some very solid support in the 11900s, which is to be expected following the break below 2350, which had opened a measured move of downside extension into the 11900s. But given the broader bullish outlook here and the uptrend remaining firmly intact, a medium-term higher low is now sought out ahead of the next major upside extension back above 128.35 and towards the 2009 peak at 130.65 further up. Kiwi dollar. So Kiwi looks to be carving out a medium-term lower top at 77.44, and the market is poised for the next major downside extension below 71.76 and towards the 65 area further down. Really, at this point, only back above 77.44 would compromise or delay the bearish outlook. SPX 500. So the S&P 500 is slowly showing signs of a potential top after putting in a recent record high at 2126, but failing to really establish any momentum above that previous February peak at 2120. The market, however, would need to close below 2070 or break back below 2040 to really confirm the bearish outlook and the prospect for a top. Gold. So gold has been locked within a choppy consolidation over the past several sessions. The market still is trying to maybe put in a major base off that 2014 low at 1131, but at this point we'll need to hold above 1170 on a close basis in order to retain that recovery outlook and then break back above 1224 to confirm or strengthen and open the door for a move back towards 1300. But inability to hold above 1170 will put the immediate pressure back on the downside and expose that 2014 base at 1131.